Well, hello, hello. Welcome back. All right. So, I don't know about you, but I hear on the regular from people, I will never be able to afford a house. Like that was a parent thing. That's not a me thing, but it should be a me thing and it can be a you thing. And all you have to do is follow some steps and some processes. And Mighty Mark is going to share that with you today. And I'm Bess, a realtor here in Dallas, Texas. And Mark is with me today with us. Well, you're here again because you know it's an us thing.
Yes, we're here all the time.
Lender extraordinaire.
Thank you.
So, I mean, what the heck? Can we really afford a house and how do we go about this? Let's talk.
There's two parts to this, right? One is the real estate part, which is your wheelhouse. You know, I can't afford a house. Where can I find a house in my price range? Which
Right.
brings us to the financing. And how do you prepare for that? How do you prepare for that home purchase? So
Right.
we're going to talk about how to prepare for the pre-approval process and what does that pre-approval process look like. And so to prepare for the pre-approval, meaning that you're ready to go buy a house that day, you have to really focus on your credit first. Okay,
Yes.
most people's issues come from their credit, not so much from their income or how much money they have saved up, because there's ways around that to help you with that. So the credit focus is where I want to start with you, and that is 12 months out. So you kind of have to pre-plan your home purchase a while in advance and not just willy-nilly decide you want to buy a house, because that's when things can go kind of wrong. So pull your credit report. You can pull your own credit report once a year for free.
No
So
kidding.
I suggest everybody do that anyway. Even if you're not home buying, you want to make sure that there are no errors on there, that there's nothing on there that isn't yours, for example. Or one that I see all the time is AT&T equipment not being returned. So for example, your modem, your router not being returned according to AT&T, although you've returned it, that can lower your score by 100 points. So
That's
be very
brutal.
careful
That is brutal.
that you've done that. You have the receipt for it, because it's a process to get that off your credit. It takes months to get off your credit.
So, man,
Yep.
follow-ups real quick
Yep.
that are just my head is just pop, 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 pop. So much great stuff already. Number one, suggested place to go to get that free check.
As freecreditreport.com, I think, is one of the websites. You just Google it. There's all kinds of different websites. You can just get it for free once a year. No matter what, your bank may even give it to you.
Fair enough.
Like you go to Wells Fargo or Chase or somebody, they have a program for that.
So you're legally entitled to
once a year
no
for
charge.
free. Yep.
Got it. And it won't, and that's another question I hear. You won't ding your credit by checking on your credit.
You will not. Your credit score will not suffer from that.
So I'm hearing no excuse to be.
Yep, no excuse. And like I said, everybody should be doing this once a year anyway. You want to make sure that your credit is clean. Even if your score is high, there may be things on there you don't want on there. The other thing to look at is when you pull that credit report, it reminds you where your credit balances are. So if you have a credit card that is $10,000 credit limit and you're at $7,000 balance, it's time to pay that down. And because that affects your credit score. So if you want to bring your credit score up, pay your bills on time, pay all those debts that you have, your car, your student loans, your credit cards, you want to pay that on time. That has a huge impact on your
And
credit
time
score.
out, let's define on time. On time is like the day before the
Yes.
actual due date or earlier.
Or earlier.
That's on time.
Better yet, pay your balances off in full on your credit cards every month. But if you are running a balance, then pay those balances down, because here's the second thing that affects your credit and your qualification in terms of how much house you can buy is if you have high debt payments, meaning your credit card bills are high, your minimum payments are high, that affects your home purchase power, because it figures into debt to income ratio, which we'll talk about in another episode.
And I'm betting people have probably heard this if they've been scouring the internet. It's often referred to as DTI,
Yep.
debt to income
Yep.
ratio.
So, and if you are, the other thing I like to do, people to come to me a year in advance so I can give them guidance on that credit report. Because sometimes what I see is that you don't have enough credit in the world, which then affects your home buying process as well. If you don't have any credit cards, because some of you literally pay cash for everything, right?
Which, thumbs up. That's
Yeah,
great.
right. And Dave Ramsey will say, that's great, but you don't have a credit score. Or your
Right.
credit score is low because you have no history.
So you have no credit resume.
Right. And
Is
so
that what you're saying?
building that resume 12 months out, you can do that.
Mm.
If you're 3 months out, it's going to be challenging to get it done in time, right? So that brings us to 3 months out, 6 months out. You want to really start, the pre-approval process. That means you start filling out an application with me. We pull your credit at that point, and we verify, your income and your bank statement just to make sure that you have enough money in the bank. And how does that process work? The income part of it usually is a no-brainer. If you have income that's challenging, like self-employed income, we can still make changes to that in that time frame of 6 months or so. If you need a co-borrower to come onto the loan, that's the time when we decide that. Do you need a family member to co-sign for the mortgage to help you with the income?
No kidding. So you can do
So-
that. So it's not just for cars.
Right. And
Or
you can-
student loans.
Exactly. You can do that, and I do it all the time where young folks get their parents to co-sign, or their uncle, or whoever it is. So 6 months out, you really want to start laying the groundwork for being ready to purchase the house. And that means, you continue paying down your credit cards and cars and all that, and pay it off ideally. And then we start focusing on your income. And then 3 months out, we just verify everything, make sure that you're really ready to go. So that's kind of the 12-month process. The pre-approval itself is really not that challenging. People a lot of times overthink that. In my view, these days, most things are electronic. So you're looking at filling out an online application, takes about 10, 15 minutes. After that, we ask you to upload your pay stubs, your bank statements, pull your credit. So all those things combined don't take that long to fill out the application. And then on my end, my job is to verify that your credit is good, which if you've been working with me for 12 months, I know your credit's good.
So time out. Are you thinking like me? What is good credit? We're going to talk about that in another
It's a
episode.
great question. Yes.
Yes.
We will talk about that in the following episode. So look for that.
Carry on.
Yes. So we've verified your credit. Make sure that's good. We've verified your income and that's where it leads back to the DTI, to debt to income ratio, because a little bit later, another episode, we're going to talk about DTI as well. So I'm not going to go into too much detail, but basically all your debt payments that you currently have, plus your new house payment, compared to your income, that's your percentage of debt to income. Okay. So that means, if you fall into certain percentages, you get qualified or you don't qualify. So, and not only that, but, DTI has effect on your personal wealth as well. So if you stretch yourself too far with that DTI, with that debt to income ratio, it hurts you financially in the long run. So you want to make sure that fits your, financial goals. So that's really, the assets. I spoke at the beginning. If you don't have enough money for a down payment, for closing costs, there's ways to come up with that money. There's ways on the real estate side to negotiate that. There's ways on the lender side to find you a lender that has help, that gives you a grant or something else, down payment assistance programs as they are called. And we have another episode on that, actually, so search for that if you're interested in that. And that's really the pre-approval process. Takes less than a day, and I'll, when you
No
come
kidding.
to somebody like me, if you happen to catch me at the right time, I'll get it to you in an hour, so it doesn't take long to get pre-approved. It's not as painful as you think. And it's better to know what cards you're playing with up front than, to get into the process. And I know Bess has stories about people
So
getting
we're-
in the car with you,
Yes.
not being pre-approved, saying, "Oh, I'm fine.
Yeah, I know.
So
What I'm hearing you say, what we've all heard, right? Knowledge is power.
that's right.
And it really comes alive. You live it when you're in
And you can fix things
process
if
of
you have
buying a
enough
house.
time. But if your lease is running out in 3 months, now your back's against the wall. Now we have to fix your credit or have to find a co-signer for it. Then it becomes a rushed process. You become, it's more stressful on the home buyer if that happens. So my suggestion is plan ahead, know what cards you're playing with, know your credit, pull your credit report, know what kind of income you're playing with, what kind of debt to income you have, and where it needs to be for you to be financially safe. And then how much money do you need to save up for the process? A lot of people come to me and say, oh, I have the down payment. I go, what about closing costs? Or, oh, I didn't think about closing costs.
That's an extra
That happens
deal.
all the time.
And it's
right?
two separate items. Please hear that.
Two separate items, and they're almost equal a lot of times. So if you do a 3% down payment, your closing costs are probably another 3% on top of that.
That's true.
Now you're talking real money. So that's where people get tripped up. So don't get tripped up. You have 12 months to save up, because that's something we can, tell you 12 months in advance, how much money do I need, right? We can guesstimate that pretty closely. And so you have a goal to save towards. So what about some stories about this? Do you have any stories?
Oh my gosh, don't put me on the spot. Holy cow. Well, I mean, we've worked together with all sorts of amazing, interesting people. We have shared with couples, now is not your time.
Right.
Let's and we touch base in 6 months, 12 months, or even 18 months. Because there's the right time for everything. Right. Right now we're working with a fabulous couple that they're engaged. So they're still negotiating that as far as where should the house be located. Her business is north of Dallas and his business is south of Dallas. So where do we land? And talking about affordability and everything else, they've been working with Mark for a while, and we went out and looked at a few things, and all of that to say, because they had the knowledge and the understanding of what they could afford when we found, or what they were comfortable affording.
Correct. That's the key difference.
Clarify.
Yes.
What they were comfortable affording. When we found a house that had recently had a roof replaced, recently had an HVAC system partially replaced, i.e. the box, the condenser outside was replaced, the air exchanger inside was not replaced. But all that to say, when we came up with the best offer price, because they had chatted with Mark also about down payment, and we had talked about closing costs, we were able to make an offer with confidence. We are in, as of now, December of 2025. Fun fact, it was a multiple offer situation. We did not offer list price.
Nope.
And we did offer clean, smart terms that they were confident in presenting, because they had talked to Mark and me about the finances and the different things. So all that to say, their homework, having been done well and done diligently, paid off in the fact that they were selected as the top offer without being the highest offer, the agent told me, simply because it had the smartest terms and the most financial strength. And I will say thank you again for talking to the agent, because I think you actually brought it home for this amazing couple.
Yeah, and that happens a lot, that as a team, we work to convince the seller to take the offer, because you have to remember they have a lot online. They're making big decisions too.
I will take umbrage at the word convinced. That sounds a little bit
right.
I will say we present an offer in such a way that how could they possibly?
That's exactly right. That's exactly right.
Possibly say no.
Being prepared.
We urge them in a happy way to compel them to say yes to our people
and being
our team
prepared
and our process.
Being prepared is the key to that, right? You got to
dial it back. Yes.
You got to Best needs to understand what you want, what your goals are, and then I need to understand the same thing on the finance side, and that creates kind of the strategy for the negotiation.
And then actually is good with. Obviously, we can't work with everybody. So when you are looking for your team, please hear that. Ask these questions, and that way you can come up with a strategy that wins.
You want to work with lenders and realtors that give you honest feedback, that are not yes people, that not just say, oh yeah, we do whatever you want. We guide people. You want people that guide you through this, that advise you, and don't just sell you a mortgage, or don't just sell you a house. There are this is a big deal. and you want to make sure that you're ready for it. You want to make sure that you have all your ducks in a row. And that's where the pre-approval process kind of prepares you for all that on the finance and the real estate side, because during the same time that this couple was getting pre-approved, they were talking to Bess about real estate, about the strategy, about where to live. Those are all things that take time to figure out. So you don't want to start this process late and then be in a rush to find a place. So take your time with this and really get comfortable with it and get comfortable inside your brain.
This is not too different
Yeah.
than when you were preparing for finals in college, for example. Think of buying a house as like a final exam.
Oh my gosh,
to a certain
I
degree.
crammed the last day before the
Okay.
exam. I'm a bad example,
There
Beth.
you go. Okay. but those of you all, well, we all had friends that blew through finals with
Oh, yeah.
ease, and
Oh,
they
yeah.
were also the ones that never went with us to parties.
Right. Correct.
This is so doing your homework diligently and ahead of time does have its own rewards, even in
It'll
the
pay off
home
in the
buying
long run.
process. There
Yes.
you go.
So there you have it.
What a
pre-approval
awkward finish
process.
on that one. Okay. Well, there you go. So it's DTI. What is good credit? There's some nuggets in here that we're going to need to address in more detail.
We'll get to it in another episode. Yeah.
Absolutely. There you go. In the meantime, we are so thankful that you joined us on this episode and hope you find it as enjoyable and titillating as we do in sharing with you, because we're thankful and excited for you and the possibilities that your future home brings.
If you have questions, email us, keysandgears@gmail.com. Drop us a line down below, comment, like it, forward this to whoever you think needs to hear about this. We'd love to have them join us. All right. We'll see you next time.
We're here to help.